talking about the mutual funds. Just a second. Yeah. So the previous session we were talking about the mutual funds and we started our initial discussion on mutual funds. And we tried to understand the basic concept of the mutual fund, what exactly is a mutual fund. We tried to understand the concept of the mutual fund, how does the mutual fund work exactly. And we also tried to note about the three types of mutual funds. If anyone asks you the three types of mutual funds, so people get confused. They say active, passive, equity, hybrid. So you can just diversify or you can just divide your argument into three types. One, on the basis of structure. On the basis of the structure, you have the open-ended fund and the closed-ended funds. Alag. The second, on the basis of the investment style, you have the active and passive. Alag. Third one, you have the basis on the investment structure or the investment objective, equity, debt, or hybrid. That's it. So coming back to the topic once again, now in this session, we're going to talk about the advantages of the mutual funds. Okay. So when we talk about the advantages of the mutual fund, the first advantage is of the liquidity. Obviously, the open-ended mutual funds, especially which can be listed on the stock exchange because they have liquidity, a buyer and seller. Okay. In a closed-ended fund, you cannot like redeem your unit without asking the bank. And again, some penalty charges would be levied on that. Right. So talking about the liquidity, again, the mutual funds have liquidity because most of the mutual funds are investing into the stocks being traded on the stock exchange. The stock exchange has the highest number of people like trading, buying and selling, going for trading long-term investments. So obviously for a seller, there is always a buyer and for a buyer, there is always a seller. So that is one of the advantage of the mutual fund, that is the liquidity. The second advantage, and see, the liquidity can also be termed as what I said in the case of the open-ended funds. That is, if you want to like redeem your units, then the mutual fund manager would be selling those units and some other one would be like buying back. So a buyer and seller hai. The second one is diversification, as I talked about in the previous session. Instead of diversifying or like instead of just picking the stocks into one sector, though that is also called diversification, like within the sector, the intra-sector diversification. But that is something which is concentrated. Instead of going for the intra-sector diversification, you must go for the inter-sector diversification for a large number of sectors, maybe pharma, IT, FMCG, metals, real estate. So try to diversify your portfolio into like different sectors. Though like within sector is also diversification, but the real meaning or the true meaning or the true benefits of the diversification can only be derived when you are diversifying intersector, that is across different industries. Third is the expert management. Obviously, because we as the layman person, we first of all we do not have time to track the investments 24/7. And also we like do not have time apart from our job or like the things that we are doing to track the market on a real basis. So obviously we cannot track our own portfolio. So that is a problem. So what basically happens in case of a mutual fund, the person who is into this industry and whose main job is to manage the mutual fund, he gives you an expert management. So first of all, see, talking about like there can be some biases as well. Like a mutual fund manager might suggest you a portfolio which might suit his needs. Like he might get a certain commission. But up to that extent, you have to make your own research as well. So keeping all these things constant and separate. So talking about the expert management. So this person is quite professional and expert into this field. So that person will be like advising you how much to buy, when to buy, do lump sum, SIP, when to do. So all these things he would be telling you on the basis of a risk appetite. That is whether you should go for equity or debt or combine equity and debt or go for commodities and all these things. But ultimately, you also have to look on your own, especially the expense ratio, which I talked about in the previous sessions. By expense ratio, I meant the amount of expenses on the total AUM or the asset under management. कितना खर्चा फंड का लग रहा है तुम्हें like mutual fund लेने में. And खर्चा क्यों लेते हैं? Because obviously the expert manager or the portfolio manager who is making a portfolio, apart from the salary that he's getting from the company, he also wants a certain commission from you for managing the portfolio. If you're not giving him the certain commission, why would he work for you? The second thing is some marketing expenses, because these mutual funds are ultimately marketed on television, radio channels, YouTube, and everywhere. And even the people are recommending this portfolio. So all the marketing expenses and promotional expenses which are incurred by the mutual fund company or the AMC, again, these have to be recovered. The third one, they talk about the less cost. See, expert management में एक point और बोलूँगा. When people buy mutual funds now, they blindly buy it. Also look for the expert management, that who is handling their mutual fund, how much experience he has. If a person has been handling the mutual fund just for 6 months or 2 months, He can be good, but we are not sure about his efficiency. But a person who's handling the mutual funds or is in the mutual funds industry for the past 20 years, 30 years, or 15 years at least, or 10 years at least, he might have a considerable experience. I'm not saying that do not like rely on the freshers like who are like managing the mutual funds, because nowadays even the freshers have more knowledge as compared to the people like who have been working, or to the old bees like who have been working for decades. Because even the young people have started to analyze the market in their own and better way, right? But that is something like which should be taken into consideration as well, which people take into consideration. And baki like सबका अपना अपना होता है, and like it's like completely on you that which strategy like you want to go for. An export manager having it for 10 years, 20 years, or just 1 year, right? So that's the financial literacy. So the less cost for bulk transactions. When we talk about the less cost for bulk transactions, obviously the amount of transactions that you are handling, the larger is your portfolio, the transaction fees would also be low. Let's take a basic example in this. Like for example, when we buy something, like if we buy a chocolate for 20 rupees and the price of one chocolate is 20 rupees, and if you buy just one chocolate, or maybe two chocolates or 10 chocolates also, so that person will give us just for 20 rupees only. But if you buy the chocolates in hundreds or 200s or 500 chocolates, maybe that person would try to reduce the amount from 20 to 18, because like we are buying in bulk. Similarly, in case of the mutual funds, when you are buying just one unit, it can create a problem and can increase the expense. But in case for having a lot of shares, or buying a lot of units and doing having bulk funds, in that case the expenses can also be low. And by having the bulk funds, I means having an holding. ठीक है, because मतलब ये नहीं है कि बहुत सारा तुम buy कर रहे हो and बहुत सारा तुम sell कर रहे हो. And in that case, you are thinking that like that we are doing bulk trading, bulk buying and bulk selling to mutual funds or to any other like trading platform. In that case, you won't gain, or your amount will be lost, because ultimately some charges are also there in buying and selling. Okay, so by this less cost for bulk transactions, I mean जितनी बड़ी investment करो, जितना बड़ा portfolio है, जितनी देर hold कर रहे हो, so that will give you benefits. Then cost efficiency. Obviously, this point, fifth point of cost efficiency is directly like related to the third point, right? Then the automated payments. Again, you can trigger, like you can say to your mutual fund manager that automatically some payment must be deducted from a like from a bank account. तो automatically वो deduct हो जाएगा. Okay, and demat account खोलने के as such में need नहीं है, because like these people have their own demat account. Okay, so like mutual fund like मतलब if you are like investing stocks खुद से, then demat account खोलो. But if you are like putting your money into mutual funds, then you need not open the demat account, because like those person will be handling it on your behalf. Automated payments मैंने बता दिया, and that ensures a systematic thing. Okay, a disciplined thing कि इतना amount has to be deducted each month. Okay, and that will lead to like further good investments in future. So that is one thing. Yeah. Then suit your financial goals. Obviously, the mutual fund like must be able to suit your financial goals. See, this expert management will tell you a large number of things. Again, like go for this fund, go for that fund, and that fund has given return or not. But an expert manager who is like literally concerned about you as well, he will also ask about your like risk appetite. Like for example, if a person who is in the age of 20 years or 25 years or in early 20s or early 30s, that person can take considerable amount of risk because he's young and he can make his income. Paisa do bhi hai, that person can make his income. That person is more concerned about the capital appreciation and growth. Whereas a person who is in 50s or late 40s or 60s, so that person might be more concerned about the preservation of capital. Like for example, if he has invested 20 lakhs into the mutual fund, so that person would want at least 20 lakhs save rahe and 20 lakhs se बढ़ता रहे. Okay, so that person cannot imagine कि 20 lakhs se kam ho jaye, because he had put in his hard-earned wealth. So on the basis of the risk appetite, so this can be done. Again, if a person is more risk averse, and a risk averse person is the someone who doesn't want to take risk in the stock market, so that person would be investing more into like bonds and all, because that gives a fixed rate of return or interest payments. Whereas a person like who is the risk taking or the risk tolerant person, that person might be investing into equity, because equity markets are risky. Boom is boom, and जब गिरता है तो बहुत गिरता है. That is one thing. Then quick and painless process. Obviously, like if someone is serving you, they would try to make the process as quick and as painless for you. Then tax efficiency, again, like you are getting some tax efficiency. Like if you're like investing into such mutual funds which give you the benefits under Section 80cc, like you have that limit of up to like 1,50,000 for ELSS and all these. Equity linked saving schemes. So what happens in an equity linked saving schemes, at least 65% of the amount is going towards equity. तो अगर like 1,50,000 तक का तुम्हें एक टैक्स रिबेट मिल जाएगा, उस पर टैक्स नहीं लगेगा. Invest in smaller denominations. Obviously, you can do an SIP of 500 rupees per month. In index funds, which track the index, you can do the SIP of like 100 rupees also per month. Then they talk about safety. Safety is nahi hai. Safety in the terms of the company is managing a fund safely, but not on the basis of the market. Then systematic or one-time investment, as I told you, your SIP or like you can go for a lump sum. So all these things I told you. So basically, the mutual fund is set up by a sponsor or a trustee. Okay, and he should be like registered under SEBI, and then he appoints the AMC or the asset management company. Inside the asset management company, you have a custodian. So custodian is basically he is responsible for the safekeeping of your securities and also for the clearing mechanism. Open-ended, I told you, listing of close-ended schemes are required to be listed on the recognized stock exchange. It says the close-ended schemes like must be listed on the stock exchanges. That is mandatory. Equity funds, I told you that what exactly is an equity fund, I told you in the previous session. Debt funds, I told you, and hybrid funds also I told you. When I talk about the interval funds, so what exactly happens in interval funds? It's a type of the structure. Open-ended, close-ended, and third is the interval funds. So what basically happens in the interval fund, the mutual fund for a certain point of time is the passive one, is the closed-ended that you cannot like redeem. But for a certain period, maybe like 15 days or 20 days, it becomes open-ended. At that period of time, you can like redeem your investment without any further charges. Debt schemes we talked about. So the next session, I would be talking about the types of debt schemes. Okay. That was all for today.